All right, we got to talk to you about it. Shut down just in its ninth day. We got that data from Moody's that we always bring up. For every week of the government shutdown, quarterly GDP is impacted by 0.1%. What's the impact on the manufacturing sector? Are there certain parts of it that are impacted more than others?
Well, I think overall, Frank, the business community in general, but certainly manufacturing, depends on certainty. And having this kind of uncertain time where we don't know when the government may be back in action is a problem in terms of making investment decisions and hiring decisions. But that's not just the only issue. Let me just start by saying manufacturers overall are pretty optimistic. Our board of directors just met last week in Washington, and I heard really positive comments from manufacturers based on largely the work that has been done on the tax provisions of H.R. 1, some regulatory modernization, energy dominance here in the United States, but there are some concerns, especially when it involves the workforce and trade policy.
All right. You're mentioning trade policy. I'm assuming you're also kind of lumping in tariffs in there. You gave us a number. Right. Manufacturers are spending about $350 billion each year to comply with federal regulations. When we look at the manufacturing sector, over the last year, the manufacturing sector has actually lost over 70,000 jobs. If you look at ISM, it's been in contraction since February. A lot of people thought that this administration would be pro-manufacturing, especially with the efforts to bring manufacturing back to the U.S. Why are we seeing those numbers?
So let's just start with the basic premise. This administration really is pro-manufacturing, and I think the tax bill really highlighted that, and also regulatory modernization. You mentioned that $350 billion figure that hopefully will be lower in total cost. You're talking about manufacturing employment. There was a reduction of 78,000 jobs available in the sector, but we still have 400,000 open jobs today. That number is going to grow to about 2 million jobs by the year 2033, and we expect to continue growing here in the United States. But that doesn't mean there's not going to be some hurdles and moguls along the way, especially when it comes to trade and tariff certainty, which is really key for, I think, folks making decisions.
All right. So, Jay, can you illuminate that number? You're saying there's 400,000 unfilled positions right now. In what areas? Yeah. We are seeing a lot of domestic construction. A lot of it's around the AI trade. We've heard Jay Powell say that. We've heard a lot of the other people say that seems to be what's a real driver for GDP. Why are we seeing all these unfilled jobs when there's so much construction, manufacturing, AI build-out work out there?
Because we don't have the people. I mean, it's that simple. Really? And by the way, this is not a new number, Frank. I think you and I have talked about it in the past. Probably for the last 10 years, it's been about the same, except there was a peak during the pandemic of about 1 million open jobs. There's a lot of jobs throughout the entire manufacturing ecosystem, especially in terms of technicians and others that actually operate some of the technology that you're talking about, AI and other forms of technology. Those new skills are ones that we just have to develop in this country, and we haven't. I also have to say that immigration and a working immigration system that is focused on the economic needs of this country is going to be critical to that as well. So that's another challenge that we have to work on together in Washington.
All right. You recently did a Q3 survey of manufacturers. You said optimism increased a bit. Yesterday, we got the Fed minutes. I want to get your take on this. I know you may not have had time to take the pulse of all your members, signaling what a lot of people see as a divided Fed, but 2 more rate cuts this year. What could that mean for manufacturing? Are 2 more rate cuts enough to move the needle?
Well, look, access to capital is always critical, especially when you're making decisions to invest here in the United States. We have a really good environment to invest here, but you have to have affordable capital to be able to do that. You mentioned those numbers. Our members have about a 65% positive outlook on manufacturing. The average is around 74% for the last 20 years or so. The high was 94% during the first quarter of the first Trump administration. It dropped down to 55% earlier this year. That 65% now, that 10% higher number that you saw, is really largely due to the tax bill that passed in July and was signed into law in July. And that really was a signal to manufacturers that America continues to be serious about being open for business and attracting investment and job creation to our shores.